Jackson Hole becomes a momentous turning point. As Federal Reserve Chair, Jerome Powell takes to the podium for his final address at the annual Jackson Hole Economic Symposium, scheduled for August 22, 2025. He confronts a defining moment not just in his tenure but for U.S. monetary policy itself. Just weeks before, Powell described the U.S. job market as solid, but new Labor Department data backtracked that optimism, revealing weak hiring in July and downward revisions to earlier months. Adding to the predicament, inflation remains stubbornly above the Fed's 2% goal. Core prices rose 3.1% in July. These conflicting signals, softening employment on one hand and persistent price pressures on the other, place Powell squarely between the Fed's dual mandates of price stability and full employment. Markets have latched onto the possibility of an interest rate cut at the Fed's September meeting. Most economists expect Powell to signal easing is likely sometime this year, but perhaps not immediately. However, inflation concerns fuel caution among policymakers, making a swift pivot to rate cuts uncertain. Compounding economic uncertainty are mounting political pressures. President Trump continues to lambaste the Fed for resisting his calls for lower rates, and has even targeted Fed Governor Lisa Cook with demands to resign. Observers warn these attacks threaten the Fed's independence, a cornerstone of effective economic governance. Powell, notably unshaken in the past, such as during a public dispute over the renovation costs of Fed buildings with Trump, has shown remarkable composure under pressure. Financial markets stand vigilant. Reports note that market participants are sensitive to any hawkish tone, fearful such remarks could derail the ongoing summer stock rally. Expectations for a September rate cut are priced in at around 85% odds. Yet, with mixed data and internal Fed uncertainty, Powell's tone will determine market sentiment. Will he lean dovish or maintain a cautious stance? This speech marks the last Jackson Hole appearance before Powell's term concludes in May 2026. Beyond immediate monetary policy, his remarks may well shape the Fed's long-term governance. With leadership turnover looming and a review of the monetary framework underway, Powell's speech could signal the institution's direction for years to come.